It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast as we cover for you the latest property news every morning on iHeartRadio, Spotify and Apple. And wherever you get your podcast from, we are up to a Friday. Yes, November the 7th. We have the weekend in our sights. November really starting to slip by now. If you have a highlight for 2023, let us know what that is. It doesn't have to be a real estate related story. You could have taken a trip of a lifetime, or you could be a first home buyer. Get in touch with us. You can email us at myrealestatepodcast@gmail.com. That is myrealestatepodcast@gmail.com. And this morning we are catching up with Anthony Landahl, who is the Managing Director from Equilibria Finance, who has been way too busy to take any trips of a lifetime.
Good morning, Craig. Great to be here, mate. No, it's been a very busy year on the back of the continued growth in the housing market and obviously the rapidly increased cash rate we've seen in Australia. So it's kept us very busy this year and, like a lot of people, looking forward to the end of the year and a little bit of time off.
And coming up this morning, we're going to, in fact, have a look at something that we have covered, but it is absolutely right now being discussed by a lot of people: mortgage prisoners.
Yeah, we're going to take another look at that, and it's becoming a bigger problem. So we're going to revisit that issue, and it's been in some of our local press recently as well.
And the property market, as we know, it has been growing at a surprising level. Warren Hogan was here the other day. He was weighing in on this very fact with the RBA. They were really forced to do something about it with the economy marching on.
You know, the economy is slowed down, but it's slowed from booming, unsustainable rates of growth and job creation to something more normal. And the reality is we're going to need a sustained period of below trend growth to get inflation back down to a sustainable level. The concept of them cutting, it's just not even worth talking about now. It will happen one day, I'm sure. So I think it's very misguided the way many economists are talking about it.
It's quite interesting, you know, like economists are talking about the cash rate cutting, and he's saying it's a complete waste of time at the moment because the economy is still running hot.
Yeah, and look, in fairness, Warren's been really consistent with his messaging, and I'll be frank, I can't really disagree with him. With where inflation's at, with where the employment market's at, the RBA really haven't had much choice but to increase rates again in November. And as Warren's intimating, we're probably going to see a bit more pain before any sort of rate cut is on the horizon. So I think Warren's been consistent, and I can't really disagree with his sentiments there.
All right, so if you've got a mortgage, we will come back after the break and we will start talking about this whole mortgage prisoner next with Anthony.
If you're confused about the property market, don't be. Unlock and educate yourself with the latest trending analysis and interviews.
And right now it is time for another 30-second property tip, and we are going to Pat once again on the South Coast in New South Wales. Good morning, Pat. What have you got for us this morning?
Good morning, Craig. In a market that's somewhat slower, sometimes people don't consider auctions, and they should, because it's a perfect market for putting a time frame around a sale when people aren't feeling urgency, and also not capping the price a buyer will pay for the property. And we've got an excellent auctioneer, and her strategy may surprise people. We often set the reserve higher than the vendor's expecting, so that if it stalls, we've still got some negotiation that we can do, and we found that very successful.
All right, and good on you, Pat. And I see that a stunning pool in a Queensland home defies expectations with its unique design. It definitely is a unique design. It's situated in Coolum Beach on the Sunshine Coast. Now, the property has used a shipping container as a floating swimming pool. Now, the best part is that you can use it as a swimming pool and also the convenience of parking a car underneath it because it's up on beams. So if you'd like to have a look at it, just type in the Pools Award, that is Pools with a Z and not an S, and you'll be able to check it out.
It's the main centre forecast.
And around the country, let's check on your weather. In Sydney today, cloudy with the possibility of a shower with 22 degrees. Melbourne, plenty of cloud around with 18. Brisbane, cloudy also with the chance of a bit of rain with 30. And in Perth today, glorious sunshine and your high of 29. And if you're celebrating your birthday for today, November the 17th, many happy returns. Rachel McAdams, the actor, is turning 44. Danny DeVito is 78. Martin Scorsese is 2 years older. He has hit the big 80 today.
Remember, we are not a real estate company. We are 100% all about increasing your awareness and knowledge for buying and selling properties.
And we are back on your Real Estate Friday, ahead of another weekend coming up, and we are talking property. Anthony Landahl is back, the Managing Director from Equilibria Finance. And of course, with the RBA lifting the cash rate, it's now 4.35% in November, the 13th rate rise since May of last year. Homeowners are grappling with mortgage stress, still finding it pretty hard to refinance to cheaper loans despite updated lending rules and a rebound in the property prices that should make it easier to change lenders. And it's something we've discussed before, as we mentioned. Anthony Landahl is back. So firstly, Anthony, in simple terms, what is a mortgage prisoner, and why is this going to be not only an issue right now, but probably an issue into 2024?
Yeah, g'day, Craig. Look, mortgage prisoner is a bit of a headline grab, but it's a real issue for a lot of mortgage holders, and it's got worse, as you touched on. We discussed this topic 3 or 4 months ago now, but the problem's getting worse. Essentially, a mortgage prisoner is someone who can't refinance to a better rate or to a better facility that's more suitable to their current needs because they can't meet the requirements that the banks essentially use to assess their loans, which is typically a factoring in a buffer of 3% on top of the current interest rate. They can also be trapped by negative equity if the housing market falls. That was more of an issue maybe 6 months ago. The market's rebounded again, but essentially it's where someone's unable to refinance to a better rate because they cannot meet the requirements the banks use to assess loans.
And it's probably fair to say it's a little bit of a confusing time for your customer base, particularly with the fact that the prices have risen. Some would say, well, maybe that's going to make it a little bit easier. So talk to that, as well as what are the reasons somebody does get stuck on these higher rates.
Yeah, it's a really good question, and confusion is a good way to put it. You might have a customer who's on a rate of 6.5%, and we say to them, hey, we can get you 6%, for example, but then we say, look, you don't meet the serviceability criteria of the bank, even though you've got a very good credit history, you've never missed a repayment, and we're going to save you a lot of money every month by lowering your rate. So it's a real problem. And the biggest reason people get stuck in that situation is fundamentally serviceability. Essentially, the way a bank assesses their serviceability is they use a buffer on top of the interest rate. That buffer's 3%. The cash rate's gone up 4.25%. So essentially, borrowing capacity's fallen about 30%, meaning some people who have never missed a repayment, who have a great credit history, can't refinance to a lower rate. So it's very confusing and it doesn't make sense.
Yeah, so the confusion sort of spills into this question as well because, you know, there's been so many of these rate rises and the problem has just sort of grown. It's become bigger and bigger, and some people just sort of get left behind sometimes when they do get caught up with this whole mortgage prisoner. Is that fair to say?
Yeah, it has become a big problem. And just to put some numbers around that, if you've got a loan of $500,000, your repayments might have gone up $1,200 a month since the first rate rise in May 2022. That is not insignificant. If you've got $1 million loan, then it's probably double that, $2,500 a month. That's a lot of money to be adjusting your household budget. The RBA recently gave some estimates that around 20% of owner-occupiers would be unable to refinance if the cash rate lifts one more time to 4.6%. Now, when we chatted last time, the cash rate was around about 3.6%, and it was estimated about 16% of households were unable to refinance. So that's about a fifth of people with a mortgage unable to refinance or who are stuck in their existing facility when potentially they could move to a better facility with a lower rate and make less repayments. That's where the rubber hits the road, where people are stuck in a facility where they're paying more than they need to be.
So the homeowners that are in this situation that are listening to Anthony on this Friday morning, what can they be doing if they are stuck in this situation? They'll be saying, is there a solution that I can improve my situation?
Yeah, that's a good question. And just on that last point, that's about 500,000 mortgage holders that potentially would be stuck with their existing lender. So that's a lot of people. So what can people be doing? So the key stuff is to understand what serviceability is made up of. It's your income, your living expenses, your assets and liabilities. So you may assess your budget. It may be that there's some discretionary expenses that can be taken out. It may be you've got some credit cards that you're not using that can be closed to lower your overall credit limit. It may be you've still got a little bit left in offset that you can potentially pay the loan down a little bit to lower your limit. First thing is go to your existing bank and ask them for a lower rate. Get on the phone or speak to your broker and ask for a lower rate from your existing bank. And then there's other things that lenders are able to help with. You can contact your lender and get some hardship provisions if you need. You can request maybe a period of interest only, or you can also look at maybe extending the loan term to lower your repayments. There are some things you can discuss with your lender. There are some things you can look at yourself around assessing your budget to lower some of those discretionary expenses, but also to look, if I do assess my budget, if I close some credit cards, if I do a couple of things that might put me in a position to be able to refinance in a couple of months. One other important point is some of the lenders now have dropped their serviceability buffer to 1% rather than 3%, and that's making a really big difference.
Now, he's very, very popular. You might have heard the ding-dong in the background. That is his receptionist saying it is time for your next meeting. And Anthony was just saying he's wall-to-wall today. So that's how popular he is on the mortgage front. Anthony, I'll let you get to that next meeting. And thanks, as always, for coming back onto the Real Estate Podcast this morning. Have a great weekend coming up.
No, thanks very much for having me, and it's a really important topic we covered today, so it was good to cover that ground again.
Don't navigate the real estate market alone. Let us help guide you in the world of real estate every day. Make better informed decisions with the latest news and insights.
And a very good morning to you, Jane. Welcome to the Real Estate Breakfast this morning.
And what a pleasure it is, Craig. Thank you.
Let's ask you, because I think you know geographically where it is.
Let me tell you, the easiest way to describe Pyrie, it is probably about a 25-minute drive from Berry, which is where our office is located. It is also gateway to Greenwell Point, Kalala Beach, home of the famous rock oysters. It is surrounded by dairy farms and an amazing lifestyle.
We connect you to the best real estate information across Australia. The Real Estate Podcast.